So if we just start off with the green list, which as you know is the ready to enter list, this is the list that we're going to be waiting up to the markets at 10 o'clock tonight to make sure that we aren't missing out on any entries, because they are pretty much already given an entry signal just as Friday closed there at 10 o'clock. So again, depending on how big the gap up or the gap down is in the market and how it actually comes back to where it originally started and what happens there, does it still respect the structure that we've put in place, and is it likely to respect the levels that we have drawn out? So let's just start from the top and work our way down. We'll start with Aussie US dollar, and then we'll break down the US dollar, and then we'll also have a look at any fundamental news that we need to be wary of. So Aussie US dollar, as you can see, we are looking for a buy position. Now we are currently on the 4 hour right now. If we go to the 50-minute chart, you'll be able to see a little bit better understanding of what we're actually looking at here. But we are looking for either a buyback up to the 0.786 handle or some form of retracement into maybe the 0.5% or the 0.618% Fibonacci level, because it's quite a big gap down. So the US dollar is obviously playing a strong part in this being strong, pushing that price action up, pushing the price action down, sorry, and then now we're coming back to that retracement, but we're only retracing to that 0.236% level. Which of course in terms of retracements is actually a really small retracement, so we do look to take that back up to more the 0.5 level, 0.6 level, but right now as it's looking like it's holding the 0.236 level. But if we zoom out here, you could actually see that a level around about 0.5 looks a bit more probable, or maybe even 0.38, because you can see we had these quite well respected areas of support here, around about that 0.382 level. And you can see if you scroll over to the left a little bit, you can see we've had a good double bottom here, good support here, and also there will be a form of resistance in there as well. So it's obviously a level that we need to be looking out for. But right now as it stands, we do feel like it is ready to enter. We did anticipate getting in here, but of course with the market being on Friday, it was 6 or 7 hours or so before the market was actually closing. There was no point actually entering that trade, because you never ever know how much the gap is going to be when the market opens back up. Sometimes that gap could have quite a big effect, especially if your stop loss is not put in the correct place, and maybe you've got quite a big stop loss and you've not actually been following a really strict risk management strategy, and you're maybe risking more than that 2 or 3%, and you will get caught out because you have no control. When that market opens back up, you have no control of the price action. So always make sure that you aren't diving into positions on a Friday that you don't actually need to be diving into, especially if you're an intraday trader, because then you're having to hold that over the weekend, and it's going to be bearing on your conscience knowing that you don't have any control when that market opens back up, how much it's actually going to fluctuate in terms of in your direction or not in your direction. So US dollar JPY, this is actually a really good pair. We're going to put this down to the bottom because it's typically the ones you want to act on first, because these are the ones we all want to act on. And this is a really nice setup. It's a textbook setup. You've probably seen this a million times. So we are looking to enter that really soon. That's USD JPY. So let's go to Euro GBP. Again, another really good trade. Massive hammer candle. We're starting to push price action back up. If we go to the 4 hour, let's just make that visible on the 15-minute. So there we go. If we go down to the 15-minute, you'll be able to see that again. This is exactly what we're looking for. This is the 4 hour. The red is typically what we're going to be using for 4 hour zones we've marked on the 4 hour. So now you can see we've had an inverted double bottom. We've come back down to retest it another time. Whilst being pushed in that pattern, as you know, it is a reversal pattern, the descending wedge pattern. So now that we've printed on Friday that big hammer candle, we would anticipate buyers to actually step into the market and really push price out of this pattern, and then all the way back up to around about the 0.86400 region. So that's what we're looking at on Euro GBP, Euro JPY. Again, a really nice descending channel into a really big level of support. So we are anticipating that once we do get in this area where we hit the bottom of the trend line, which is one confluence, we hit this big area of support, which is actually the green ones are 15-minute supports. Still extremely relevant, and it's held very well in recent times. So that's what we're going to be looking for. We're going to be looking for price to give us some sort of entry signal when we do get into this green zone at the bottom of this descending channel, and then pop right back up round about 133,600 handle. As you can see, we could be looking potentially at a 7.7 to 1. I mean, it depends on the entry signal that you actually get. If we do get a good entry signal, then great. It might be a little bit more of a bigger stop loss, but again, definitely one that you want to be paying attention to and one you want to be keeping your eye on, because that 4-hour zone that you see here is again another well respected area in the market, and price is, if we break out of this channel and we do respect that zone, price will be very likely to go back up to that level. So that's what we're looking for in Euro JPY. Again, another trade that's really just ready to be entered. USD CHF, again, this is just a 15-minute level. It's not really, because we've had that break, we know we're going to be coming for that pullback phase, and then we're going to be looking for a continuation. So it's really just simple. And where we could see the next potential threats is here, but ideally where I think the market would look to take this back up to 0.90483 or 0.90400, just underneath that high here that you see was made on the 4th of June 2021. So that's what we are currently looking at right now. We have had a strong dollar. We might have a strong dollar this week. We will get into that, but it's ultimately what's going to drive us into making decisions on the dollar pair. So Euro USD, again, really overextended in a bearish fashion. We are looking 100% for a pullback. If you just maybe throw a Fibonacci on this, just now, and really all Fibonacci is good for is just giving you another confluence to where some good levels actually might be in the market, because sometimes you might be looking at a chart and things just might not be popping out at you. Sometimes this can be a great tool just to throw over the top of price action if you know how to use it correctly, and you are picking highs and lows, and you understand the relevance of it on each time frame. Like for example, what we're using on the 15-minute right now, the levels aren't going to be as significant as what you would if you found this on the 4-hour or the daily, plotting out levels that way. You have to understand that they're more likely to be broken if they are on the 15-minute or those lower time frames like the half an hour. And then when you start getting to the 1 hour, the 4 hour, the daily, that's when the levels start really becoming concrete, and then you can make really big buying decisions or selling decisions when you do get to these levels. But they're also great for take profits. And then typically what we use the 15-minute for is where we could really get granular and try and pick out the very best stop losses where we're going to get the maximum risk to reward, and we're putting our take profits in places that aren't overextended and they are not being affected by our ego by trying to hit 8 to 1s, 10 to 1s, 11 to 1s, and trying to pick the tops of the market or the bottoms of the market and then ride trends all the way up to the other side. It's not really what we're trying to do. We're just trying to identify the trend, not be all the time the first movers. Typically just sit back, wait, notice for the early signs that this is a trend that's going to last, although you can never be 100% sure of that. But based on all the trends that you've probably been in and continue to be in as you keep going on the trading, you will start to realize the ones that haven't started instantly from the very, very beginning, but they've just recently started, and you're starting to see the beginning of a big trend. You're never ever going to get, unless you're very lucky on very seldom occasions, you pick the very top of the market, you pick the very bottom of the market, and you're able to ride that wave up. But 9 times out of 10, you're going to be looking to identify ones that have started and that you know based on past experiences that they are going to continue quite strongly. Silver was a good one, but I'm not even finished your USD, sorry. And you can see here, once we start to zoom in, you can start to see the levels a little better and how they actually interact with the market. You can see that's a nice level here. You can see that inverted double bottom before we had that push up. Let's just stretch that over a little bit. Let's do it to that top. Oh no, we'll do it to, because that is technically the push phase. Let's get that as accurate as possible, and then we can zoom in and start actually identifying the levels that the market most likely will retrace to. And you can see here, this is what we were looking at. We know that the market was in a push phase. This is now the pullback phase. So ideally we are short on the dollar, we are short on Euro USD, sorry, we are looking for sell positions, but right now the market isn't really in a position to give us a sell position because it is extracting. It was expanding all the way down to this level, now it's extracting back up. Now we need to try and figure out if we do want to take a counter trend trade, which is against the main trend right now, especially on the 15-minute, is where are we going to retrace to. Now that's what the Fibonacci retracement tool is probably best for, is not only identifying levels and overlaying it over things when you're maybe struggling to identify the levels, but it's also a great indicator to where the market might actually come back to. So then you can make money with the trend and against the trend as long as you are very accurate with your analysis and you don't overshoot it. Like, it's very, very rare that the market will come all the way back to the highs again. Of course it does, but it gets more probable that it will stop at the 0.38, 0.5 or a 0.6 Fibonacci retracement level majority. Like, that's what's normally going to happen, is either one of those three levels are going to get hit the majority of the time, and if they're not hit the majority of the time, you are going to get that 0.786 and the 0.236 hit seldomly. But right now it makes perfect sense that if we are able to get a nice entry signal in here, now that we have respected this as a support, we've broken below it, we've came back inside it, respected it as support, and we do look like we are going to hit that next level. So that could be a trade that we are looking to get into almost instantly, and you can see here it could get us a nice 4.3 to 1 risk to reward, and it's again a really small trade to take, and it'll give you good quick wins, so you're not in the market for too long, and hopefully you could be done in a couple of hours and you've made yourself your risk 2%, 8%. So silver's a little bit of a mess, if I'm being honest, but we are coming into a really nice level. We found that really nice 15-minute level in line with, you know, our major trend line. So this is a real area of interest for us, and if we do get that entry signal, we're going to take it up to one of the big target levels. As you can see, it's coming up to the top of this pattern here. So if we just zoom out, let's say we go to the 4-hour, you'll be able to see what's actually going on. Now this trend line has been broken many times, but every now and again the market comes back and uses it as resistance, 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 used it as resistance again. Now we're coming back up, and we think that we are able to take price action back up into an area like this where we will find resistance, and then eventually we will start to see that rolling over. But right now I do think we are going to hit just under the 29 mark, so we will look for inside this area anyway to take price action back up into, and then whatever the market wants to do, and there on out we will let it do, because we have, if you can see here, this level in the green, which was the 15-minute level, it actually forms almost an ascending triangle, which is just hammering off this resistance, hammering off it. Eventually we've broken through it, come back to retest, and it could look like it could be a really nice trade and back up, and you could bank yourself another, if you risk 2%, you could bank yourself another 8 to 9% if it was to take profit. 𝗙𝗋𝗋, another really nice interesting one. We've got a key 15-minute level here, as you can see, matched up with a significant area of support, which comes in the form of a well-respected trend line. So we've got two confluences there. We are in that push pullback, and now we're going to be looking for that push phase. So we've got three confluences. We're at the end of that phase. We're showing signs of exhaustion. We're hitting a key level on the 15-minute, and we're also hitting an area of support from a pattern trend line that's been broken, come back down, and hopefully if we do get that entry signal on the 1 hour or on the 15-minute, we will take that back up to 91.129. So NZD, CHF. As you can see, we're really starting to roll over now. But this is right here an extremely well respected bearish trend line that we actually broken through, respected it. So we've respected the buyers in the market. We're saying, right, okay, we're treating this break of the trend line as a continued change in direction. Now we're slowly starting to come back into this new bullish trend line that's been formed, and now we're hitting that cross area where the bullish and the bearish trend lines meet, which is an extremely high impact area, or it can be if you get the right entry signal, you get in correctly, but it can be a very good explosive trade that will make good money, and it'll be over pretty quickly. Bearing in mind that there aren't any too crazy fundamental updates that might take us out of the market. So that's typically what we're looking for. And if we go down to the 15-minute, you'll be able to see this area in red is the area of interest, and that is where we will be looking to take that trade up, and we do anticipate breaking out of that bearish trend line. So EuroCAD and NZD-JPY. Yep, you can see we've broken that bullish trend line. We've hit off that prominent area of resistance. Now we're coming back to retest that area in line with, you see this little mini area of, if we go down to the 15 minutes so we can get a more accurate level. Let me just... If you can see here, this is, put that green because that's going to be the 15-minute level, and you can see here we are starting to reject that now, and this is where the start of the shooting star candle was formed on the 4 hour. You can see if we go to the 4 hour, although the 15-minute looks like it's broken back through, it's actually not broken back through. If you go to the 4 hour, you can see that we are starting to form a shooting star candle, which is a reversal candle in a bearish fashion. You typically see them at the top of the market or on the end of the pullback phase in the bearish trend. And now we can look to take positions down to 1.4600 handle, where we started that initial bullish run up, but it doesn't look like we are done yet for selling positions. Now NZD-JPY, this will be the last one. We're just going to go over the ones that are ready to enter this week. We could go over the ones on our watch list as they come up. We might do another live on Wednesday, so we'll do the ready to enter ones on Sunday, and we'll do another live on Tuesday or Wednesday. So that way, on all the ones that are on our watch list that aren't just quite ready yet, we will pick all the ones, a handful of them that are ready, and they are going to be looked to be traded in the second half of the week, and we'll do a second live. So NZD-JPY is the last one for today, and you can see it's fairly obvious what we're looking for is an ABC wave. Might even enter 1% down here and then enter another 2% if we do get the entry signal at the start of this push up. Hopefully we could break through that resistance in that trend line, or we might actually just break through this support zone at the 78 handle and then just continue to go down lower, and then we might even look for a break and retest to the downside. But right now I am thinking that we are going to be looking for a break and retest in a bullish fashion. We're going to look to get that A push, come back down in a B wave, get that nice entry signal and a long position back up to the C wave just under the 80 handle. So that's been all the pairs that we're going to be looking at to be trading when the market opens Sunday tonight, 10 o'clock, and we will update you on Tuesday or Wednesday with another live on all these pairs that we currently have sitting in the watch list right now. It's quite a few pairs, and there are some really nice setups, but they're just not quite ready yet. And we don't want to release those right now, because if there are changes that need to be made, there could be a difference between getting good trades or making some mistakes. So although you should be doing the bulk of your analysis and the majority of your analysis on a Sunday, you should be making small little changes and tweaks throughout the week, and you need to make sure that you know how to make those changes, because small little changes that aren't actually required can skew the data that you're actually being given when you're looking at the charts, and it will get you to make decisions